First, let's start off here with the biggest mover in the after-hour session. That would be Facebook. The stock is up by about 8% after a massive beat despite all the controversy surrounding the social media giant. Is it safe to buy Facebook once again? Is this a sign that FANG is back?
Well, before we talk about FANG is back, I will say that Eye of the Tiger, along with Abracadabra,
is the worst song ever. Is that? I'm in your head.
Yeah. Survivor, Rocky 3.
Drago.
Was
awful
it?
music.
Terrible music.
Anyway.
I tell you what, I think Apollo Creed is coming after you right now.
I'm glad
just
we're
get
talking
on with it.
about
Let's talk
this instead
earnings,
of Facebook.
It is a big night, and we should talk about the market. And let me point this out. When the S&P was 2530, 150 or so S&P points ago, that's where I thought it would top out, and I thought we'd test those December 24th low. I have to say that for full disclosure. But now here we are with Facebook trading up about 8% off of earnings. You obviously saw what happened with Apple last night. So you're asking, is the FANG trade alive and well? Well, I hope Mike Wilson can say some things that can sort of clarify for me, because I've been wrong. This quarter was good, but the problems that Facebook faces, and I think Tim would agree with this, they have not gone away. If anything, they've gotten worse. But what I think the market told you last night with Apple, which was a good quarter, not a great quarter, with iPhones now down 15% year over year, guiding lower revenues year over year. I mean, sequential decline in revenue growth. Market is saying, you know what? Valuation suggests the worst is over and the market's going higher.
Well, valuation in Facebook is not easy to push around. In other words, it's a cheap stock. It's a cheap stock that's been cheap, and in fact, even before the worst of their problems, arguably traded cheap to the space. Some of the comps got pretty easy for them for this quarter. The time spent comp is something that actually is not a difficult one to overcome. You're seeing some deceleration in the ad growth, but it's still a very strong quarter. And to me, is going to come down to how they can guide on both OPEX, CAPEX, profitability, and really if they've got a handle on their core business. That's been my point all along.
Well, you could make the argument, though, that they actually pulled a pretty good trick here. So they guided EPS, they guided earnings down because of operating expenses going up the way they were, and expectations got so low, OPEX got so high, and here we are. We're expecting 2019 to be flat year over year, and earnings are down a little bit, and we can all agree on a $60 billion revenue number. If they're able to move those expenses now, this is going to be a profitable company growing again, trading in the high teens multiple.
And that speaks to, not to cut you off, but that speaks to positioning. So Facebook was absurdly positioned, and now you have Microsoft and Tesla, which have been expected to do okay during this print. They're down. So it's all positioning coming in here.
So let me get this straight in terms of the Facebook story specifically. You think that the problems are not necessarily over. The notion that it needs to spend a lot more to deal with these problems, that's not put aside at this point. But because the sentiment was so bad, stock got knocked down so much, the valuation got so reasonable, that it's okay. Look, it's okay for right now, at least.
We forgot that this is arguably one of the most profitable companies in the world. But I don't want to start, loving the stock 30% off the lows. I'm not jumping in to buy. It shouldn't surprise people. But I do think you got to a place where the expectations on the company's core business were really thrown out the window. So I think Instagram is obviously a bright spot for these guys. I still think the jury of public perception is a headwind for them. Regulation is a headwind. The costs of their business are headwinds. And I think it should trade cheap, and frankly, up 7%, 8%, 10%, 30%. I don't need to jump in.
But users and engagement, I think that's the main issue for Facebook, and it is the 800-pound gorilla in the room when you get to advertising. So I'm with him. I don't think you want to jump in when the stock is this aggressively off the lows, but I think positioning was that terrible, and I also believe that the market is going to sell off. So I think this one's going to be taken down along with the market.
Revenue per user, though, improved in this quarter. And I think that even though we saw growth go down, if revenue per user increases, isn't that all you need?
And so what did we learn last week? I think Mike Isaac, New York Times, talked about how they're going to kind of push all their messaging apps together here. What is that really trying to do? They're trying to figure out ways to monetize that billion-plus users on WhatsApp and all these other users that they're just not monetizing. So maybe that's payments. Maybe that's some sort of customer management thing with businesses or something like that. That's all coming. So I guess the point is we could sit here and talk about how they're getting their $60 billion. It's basically, remember what Zuck said in Congress? We run ads, Senator. That's what he said. That's what they do. you, there's other levers for them to pull in the future. So the question is, did you buy the stock below 140? Now it's 160. Are you going to get another shot? Probably, but it's the sort of thing that if you can think out 10 years and you say to yourself, these guys have such a huge advantage over almost every other platform in this space, then you start picking up this sort of thing down 40% from its all-time highs. I mean, it's a massive secular thing that was a decade old now, and it's going to be 2 decades old, and they're still going to be in the top.
You remember this. I know you remember this because you remember everything. You have a mind like a steel trap.
Well, trap.
July conference call for Facebook.
Yes.
That was quite
July conference call.
A volatile moment.
Yeah, the stock traded down 24.3% in about 8 minutes, if memory serves. We were all sitting here. I think Pete was over where Tim was sitting that night, and it was a ridiculous move to the downside. If you're suggesting you see that again, I'm not sure, but it's a point well taken that if something like that can happen in Facebook once, who's to say it won't happen again? This is, I look at this quarter and say
still below that level, by the way.
It is still below that level. It was
Just
like it was
FYI.
163 or so. But I'll say this: if people haven't fleed Facebook in the last 11 months,
not a word.
Fled
from Facebook.
But we understand what you're saying.
Over the last 11 months, when are they going to do it? Either it's too hard to delete your account, or people are just too wrapped up in it.
Yeah. How about the other movers in the after-hour session?
MAGA?
Microsoft.
Should we do a little Microsoft?
I know you're dying to.
MAGA?
You are dying to pull out your hat.
Well, this is actually a great juxtaposition. Here's a stock that actually has underperformed year to date. Some of these other stocks that got hit much harder off of their highs, but it's really only about 8% or so from those all-time highs, but it was trading about 24 times. I mean, you think about it. So here's a name that actually has really tough comps. Trading 24 times, you say very rich to the market, rich to a lot of its mega cap tech peers, priced to perfection. So if they don't nail this, if it's not a beat and raise and people don't see in the areas where they want to see it, Office 365 and Azure, the thing's not going much higher.
I mean,
it doesn't have the ability to go.
The high growth, high margin businesses that did so well in the second half of last year. And we're going into a year where if you believe that economic growth is going to be challenged around the world, and you've got a high bar to meet or exceed in the second half of this year, those things coincide. It's not good timing for Microsoft.
But if you look at Azure, is that how you pronounce it?
Azure, whatever.
Whatever. If you look at it a couple of years ago, it was 5%. And now you're up to, just under 30%. So I think they're going the right direction. They are the hybrid cloud play. They're the one to catch up to, or they're the one to try to beat, or they're the benchmark. So I think ultimately you'll be okay here. Today was just over expectations.
Well, I mean, we need to see some visibility from them in a world that's possibly has weaker IT spending. And also, cloud has certainly been a place that's under some pressure. They actually just raised prices last quarter in terms of server products. And we now need to see, is that inelastic? We really don't know yet. And I think if you listen to everybody else that's reported to them that has some major exposure to cloud, and especially commoditized cloud, it hasn't been a great story to tell. So I don't know if that dust is cleared today. And yes, I mean, think about Apple, think about all the stocks over the last couple of days that have really outperformed. AMD, they've been outperforming because of the expectations. This is no surprise. They were very, very low. I think with Microsoft, this was an absolutely fine quarter. This company still continues to be probably the class of the tech space right now because of the consistency of their business model. It's a very smooth approach. I mean, they've got a very predictable revenue stream right now, and that's what I think the market wants to pay for.
You know what's not really moving in the after-hour session relative to itself and how it typically moves in the after-hour session? Tesla.
I'm in your head.
Plus or minus 10% is the average move for this stock, and it's down 2%.
I would talk to the OA guy, because didn't you do an options action on Tesla?
That was the other old guy, Co, but go for it, buddy.
No, you can. I am surprised.
Time on OA. Come on, give it a shot.
But I'm surprised, to your point, I'm surprised the stock, given the environment we find ourselves in, I'm surprised the stock is in the range it's in. Look, again, I think you find yourself in no man's land here. The stock has basically vacillated between 250 and 360 or so over the last 2.5, 3 years. That's where it is. If you're in the middle of it now. So in my opinion, you're flipping a coin. I'd wait for it to trade lower to buy it. I wouldn't do anything here.
Don't you think they got a break, though, when this whole Saudi Arabia story, when that was, I know we've talked about it, but to me, the more and more you read about that, where that was supposed to be the lifeline, and now they've totally hedged their foreign change position in the name. That, to me, speaks volumes on the growthiness of Tesla.
Why hedge if you're a real believer?
Yeah, exactly.